Thank you for joining me on this webinar. My name is Stuart Horton and I'm the National Account Manager for Aegon for Protection, and I look after, from a national perspective, the relationship with TMA. As you can see, we're going to take a look at clients' overall well-being, not just their financial well-being. Many advisors are no doubt well versed in explaining the financial value of protection to their clients. Most policies now include valuable support services at no additional cost, but do advisors and their clients fully understand the real value these offer? And if at point of sale we're going through such value, could it actually help secure more protection business? And our view would be that yes, potentially it could. So when we take a look at the need for assistance, physical, mental and financial health are all connected, and it's gaining a real big profile at the moment. And we know every day there are worries about family, employment, and making ends meet, and it can make it difficult for people to cope with their day-to-day lives. According to the Mental Health Foundation, mixed anxiety and depression is the most common mental disorder in Britain. If you add to that the fact that 1 in 2 people in the UK are expected to develop cancer at some point in their lives, and every 3 minutes someone in the UK dies from cardiovascular disease, you're just touching the surface of the problems that can impact society and your clients. Unfortunately, mental health problems and financial difficulties combined can create a spiralling downward vicious circle. And we're seeing, as I say, a big profile around everything relating to mental health. When you have poor mental health, managing financial issues can become harder, creating a sense of anxiety and worry, which in turn can adversely affect your overall mental health. If you're unable to work for any period of time and don't have protection cover in place, then times can become financially very difficult, again creating a sense of anxiety and worry. The current benefits system also is difficult to navigate, so people with mental health difficulties that aren't working are the least well placed to work with this. Financial and mental health problems therefore can have a huge impact on relationships at work, with friends and families, but particularly between spouses or partners. And when we see with the coronavirus impact that more people are having to spend time at home, you could see that potentially that becomes a much bigger risk. We define our value-added services as Policy Plus. So let's just take a look at those services. When we look at health and well-being, this provides customers and their families with access to confidential and compassionate support services, including phone-based counselling and online support tools. Access to qualified and experienced counsellors available to talk to you in confidence 24 hours a day, 365 days a year. They provide support for a wide range of issues, including bereavement, medical diagnosis, emotional health, mental health, relationships and family concerns, finances, debt, and legal issues, and work and consumer rights. And I'd like to make the point here that whilst many of those issues will be raised at claim stage, this facility is not restricted to claim. The health and wellbeing service is available at any time during the policy. When we look at second medical opinion services, this gives customers confidence in their or their family members' diagnosis and treatment options. It allows them to get a confidential face-to-face consultation with a local-based UK specialist. Customers are allocated a dedicated personal nurse advisor to discuss their medical history, their diagnosis, current treatment plan, and other important information. and they'll confirm if a second medical opinion is right for them, and if so, arrange an appointment with a specialist. The service includes long-term support over the phone from their personal nurse advisor, a face-to-face consultation to help them understand their diagnosis and treatment, etc., recommendations and treatment advice in the UK National Institute for Health and Care Excellence, so that's known as NICE guidelines that are available in the UK. A copy of the detailed report complied by their specialist will also go to their GP, and there will be support for mental health. We'll take a look at the funeral payment pledge and key person replacement service later on, but let's take a look at a couple of cases under health and wellbeing and second medical opinion services. Here we have Derek, a married father with 3 young children, and he had been feeling depressed for several weeks, but he felt he needed to keep going for the sake of his family and his growing debts, and he didn't confide in anyone. His wife was concerned he was becoming withdrawn at home and eventually persuaded him to visit his doctor. His doctor suggested counselling would be helpful, but there was a 4-month waiting list. Derek called the Health and Wellbeing Service and was able to speak to a counsellor immediately and arrange further telephone counselling sessions at a time that was convenient for him. The counsellor helped him identify a number of underlying issues and offered confidential support that allowed him to reduce his anxieties and get closer to his wife again. The Debt and Financial Information Service also offered practical advice and information to help him better manage his debts. As a result, Derek felt more confident in his own ability to make the necessary changes to ease his sense of burden. If we look at second medical opinion services and we meet John, he was experiencing ongoing neurological symptoms and had a private consultation locally. Following some investigations, he was diagnosed with epilepsy and was prescribed medication that actually could have some unpleasant side effects. The implications of this diagnosis had a massive effect on him, his family, and his work, as it would likely lead to him losing his driving license. John's job was reliant on him being able to drive. Without this, he'd have to ask his work to try to reassign him to a desk-based job instead. At this point, John felt quite low in mood, so contacted the second medical opinion service. John was appointed a personal nurse advisor who listened to him and was able to discuss the outcome of his recent consultation. As he had many unanswered questions, they helped him compile a list of questions to ask the Red Arc appointed consultant, which helped him to empower him. The nurse also helped him to manage his anxiety. He was seen by a consultant who did a thorough examination, reviewed his MRI scans, and asked a number of questions about his medical history. The consultant concluded that John didn't, in fact, have epilepsy, but that his symptoms were probably caused by a tremor or possible nerve damage sustained during a significant fall. John was advised that his symptoms would be exacerbated by stress, but that he could manage his condition without medication. John found that having received his alternative diagnosis, his stress levels were lower and his symptoms subsided. The consultant referred John to the NHS for an MRI to rule out any spinal cord damage. John was extremely relieved that not only did he not have to take medication, he was also able to keep his driving license, and his job was therefore unaffected. So 2 real positive examples of how these added benefits can help. When we look at the funeral payment pledge, which allows up to $10,000 towards funeral costs, You will notice that the seal of approval in the bottom right-hand corner here is from the PDG. This is the Protection Distributors Group, and it's a collective of large advice firms who want to build trust within the insurance industry. It sees a future where empathy, honesty and transparency are the core drivers to insurer and intermediary care. The funeral payment pledge is one of their core industry propositions, and Aegon were one of the initial signatories to this funeral payment pledge. So it means that up to 10,000 or the benefit amount, if lower, can be paid directly to a funeral director to pay for a funeral where probate causes a delay. And that could happen where the policy is not written in trust. Unfortunately, it is still true to say that around only 11% of policies are currently being written under trust. If the family has already paid for the funeral, then we can also reimburse them if they produce their funeral receipt, etc. You may ask how many cases actually require probate, and according to a recent article in This Is Money for August 2019, approximately half of all deaths will require probate, and that at that time there was a 12 to 14 week delay in probate considerations, apparently amounting to a 40,000 case backlog. So we in the industry are doing what we can to speed up these claim payments. And that is also why, under the PDG and within the added value, we have signed up to the Claims Charter to provide the best possible service at the time the policyholder and the family really need it. This Claims Charter is keen to make sure claimants have the best support, a caring, efficient and hassle-free experience with claims paid as quickly as possible. To sign up to this Claims Charter, we must meet the following criteria: a dedicated claims team available with a phone-based claims process for claimants. Paperwork is only to be used where there are no digital alternatives possible or at the claimant's request. Claimants are to have a named point of contact with regular updates at least every 2 weeks, unless otherwise agreed. Queries must be responded to no later than the end of the working day. Intermediaries are notified of all claims when made. This makes sure that records can be updated and no potential distress caused to clients and families through the intermediary not knowing about a claim. Proactively as well, we offer the funeral payment pledge that we've just been through to advance payments to speed up life cover claims where there's no trust in place to pay the funeral. Once a claim is approved, claimants are to receive payment within 72 hours. So by signing up to that charter, you can see the benefit and the confidence that that can give you and your clients when you're talking to them about protection needs. So when we're looking after their health and well-being, financial well-being is still obviously a key part of this protection process. When we look at these stats, the 131 million working days are lost due to sickness and absence every year in the UK. How do we use these sorts of things, and how do we talk to our customers regarding income protection as part of the protection service and protection solutions? It's a key part of the market, and whilst it is a growing market, as you can see from these numbers, is a growing market, but in the protection world, income protection is still vastly undersold. But when we look at these numbers, what we can see is the increase, and we've got income protection without a limited payment term, so that's driving most sales, so that can take you through to retirement. But what we are seeing also is a shift towards a limited payment term, and this obviously helps in the cost of that protection, because if the claim period is limited to 2 years, then obviously that's going to be a cheaper option than claim payment period going through potentially to retirement. When we look at what we've just done to improve our income protection proposition to include this new 2-year payment period, we have executive income protection under our business protection menu, and we have secured the new 2-year payment period into that. On just looking at that executive income protection, it's paid by the employer and aligns very, very well to relevant life. We know that there was talk by a provider that critical illness would align to relevant life, but the rest of the market didn't agree with that, and as it turns out, critical illness doesn't align to relevant life. But this income protection product aligns very, very well in respect to the treatment of its premiums, etc. At point of claim, the benefit is paid back to the company, and then that is paid out as PAYE. The big advantage around that is, I just want to highlight, when you can see there the covering what it can include. It can include, therefore, employee and employer pension contributions, and this potentially is really, really important. If you've got a company and they put in place this protection, then it provides that protection for retirement as well. Under a personal plan, you would get your personal benefits tax-free, whereas under the executive income plan, it's PAYE, but you can include pension contributions, so it can therefore cover pre and post-tax, post-retirement protection. Under a personal plan, once the benefit ceases, how would that customer continue financially if there's no income? So that's a real big positive regarding executive income protection, to be able to cover pension contributions as well. When we look at personal income protection and the changes that we've made to that to align to the new 2-year benefit payment period, we also, as you can see on there, have a lump sum death payment and tiered replacement ratio. So when we look at the 2-year payment period, what actually does that mean? And as you can see on the screen, it potentially offers income protection at a more affordable cost. Payments under a claim will start at the end of the selected deferred period, and because it's a 2-year claims period, obviously that payment will end on the 24th month or earlier if they are fit to return to work. If the illness reoccurs within 6 months of them being back at work, we can then relink the claim. There will be no deferred period for that, but that will still fall therefore within the 2-year payment period. If the insured person returns to work for a period of 6 months, they can then claim again for the same condition for a further 24 months potentially. So back at work for 6 months or more, then they can claim for the same condition. If they unfortunately get a completely different condition, different illness, then at any time after returning to work, then they can claim under the policy for that as well. To cover the lump sum death payment, if a policy is in claims payment, then we've added that should there unfortunately be a death during that claim period, that we will now pay a £5,000 lump sum, which again will help towards funeral costs. And when we look at the tiered replacement ratio, we previously just did 55%, but now what we can see is up to 20,000 we're doing 65% and then 55% up to 100,000. So what that's actually providing, therefore, is a higher level of benefit for those that are in the potentially the lower income areas, so that they can continue lifestyle and meet financial demands. And when we align that to the 2-year payment period, etc., as I say, the cost therefore is reflected in the shorter term. If they can afford going through to retirement or whatever for a longer claims period payment, then obviously that can be of assistance as well. When we look at our personal protection plans, we are very keen to make sure that we have guaranteed insurability options in place that therefore with changing circumstances, that customers aren't prohibited from making the appropriate changes to policies, etc. So just to highlight, as we're talking about income protection, just to highlight within that the guaranteed insurability option therefore can go up to a maximum of 12,000 a year for income protection. And there's also a mention on there for family income benefits. And I would just like to highlight the potential positives around family income benefit. In protection world, when people are looking at protection and life cover is primarily written lump sum. And then when we look at adding critical illness to that, sometimes clients will look at that and think the cost of lump sum critical illness actually might look prohibitive because it will increase the premium substantially. So looking at critical illness cover as an option under family income benefit can look very, very much more cost effective. When we look at our business protection proposition, just to highlight again, as we're talking about income protection, that within that environment of executive income protection, we will allow up to 12,000 a year maximum within our guaranteed insurability option. So the improvements that we've made within income protection to recognise the need, to recognise the cost implications, and therefore offering a 2-year period, but also aligning all of that to what we went through before with the Policy Plus additions that we have, it really does potentially help strengthen the client's perception of value for money and what they are getting for their premium. Thank you for joining this webinar. Here you can see obviously the contact details. I would just like to highlight that David and Nicola are your main day-to-day contacts, but at the moment, given everything relating to coronavirus, etc., they are home working, so they're not currently available on those telephone numbers. So if you do want to make contact, if you're able to drop them an email, they can make outgoing calls, but they can't receive incoming calls at the moment. Or they can deal with the inquiry via email. But hopefully you have found that to be useful, and we look forward to working with you regarding protection. Thank you.